All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me on this Friday morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So everybody, if you can hear me loud and clear, do me a huge favor, drop me a big one in the chat, and we can get this session started on what is the last Friday of the month of September. All right. Okay. Closing out quarter 3, moving into Q4. I hope all of you have had a chance to learn a whole lot this year about these markets and how we do things in the Forex trade room. So let me jump out, go over to trading economics. Okay. And we see right out the gate that the Eurozone inflation rate below forecast. So the annual inflation rate in the Euro area declined to 4.3% in September, lowest since October 2021 and below forecast of 4.5. So a preliminary estimate showed meanwhile, the core rate decreased to 4.5, the lowest since August of last year. So we're continuing to see those effects of those rate hikes. Okay. So that is decent that the inflation rate is coming down. But when you talk about the possibility of further rate hikes and things like that, right, it kind of decreases those chances. As we know, a lot of central banks, we know that they raised about 25 basis points last meeting. But looking ahead, right, they were saying out of the ECB that is probably and maybe it, right? So in regards to those rate hikes, and we saw the euro, we saw it started to take a nosedive, right, as a result of the last ECB meeting and the forward guidance coming. And we see here that the inflation rate came in below forecast. So we see here also that the treasury yields, right, always important, right? Those bond yields retreat slightly, and that's pretty good because technically we were looking at a couple of setups with the US dollar, like the dollar Swiss yesterday, and we were looking for some declines, right, in the dollar. And so we see that the treasury note retreated to 4.5 after touching 4.68% the day before, which is the highest since July 2007. So technically, we're a little bit ahead of that one. And as a result of us seeing that technically, we were able to make a play to the downside on pairs like the dollar Swiss and things like that. So that worked out pretty good. UK consumer credit growth at a 2018 high. And then we see that German retail sales unexpectedly fall, right? So Germany, largest player in the Eurozone. So we continue to see the euro against certain, against some other currencies. We saw it decline yesterday, especially like the euro and things like that. And then we've got Japan 10-year bond yield holds despite BOJ move. So, and then Brent heads for quarterly gains. We know that oil's been pretty much on the upswing. So that's that there. On the Forex factory, yesterday we saw the final GDP come through at 2.1%. We saw that consumer spending in the United States, we posted some notes in the Discord, rose at its weakest pace in a year last quarter. So we saw, we've got, consumer spending, it was at a slower pace, but then look at your unemployment claims came through. It was expected 214,000 for unemployment claims, came in at 204, so it beat forecast yesterday. So the economy continues to rock and roll. We continue to have a pretty sticky labor market. And then Chairman Powell spoke yesterday, but I didn't get a chance to figure out exactly what he was talking about. So I still need to delve into that. And then Japan, core CPI came down 2.5%. Unemployment rate came in at 2.7. So that core CPI, right, moved to the downside of forecast is 2.6, came in at 2.5. We know that the BOJ has pretty much stated that they're remaining committed to their ultra loose monetary policy. So this is exactly why we've stayed long against the yen, and we'll take a look at the charts of some of those pairs. But that core CPI coming down, right? They're not budget, right? Why? The CPI came down to 2.5, and that was the core. And so you did see some acceleration in some of those gym crosses overnight. So we'll take a look at that. Any questions on anything fundamentally as we look to close out the week, close out the month?
No.
No, no. All right. Reese, it took an L on that NZD cat, man. 50, minus 55 pips on that one. Other ones went pretty well, but that one got beat on. I was kind of banking on that strength of that cat to hold that one down. But yeah, you too. Yeah, I know. But some of the other swings gobbled that one right up. So that one was a miss though. So yeah, Joy, you got hit too. I know. I took it L on that one too. So let's take a look at the DXY. I know I mentioned that because I know we were talking about it a lot yesterday on the hang within that AB boundary. So the DXY, right? We got that correction that we were looking for. We knew where we were getting to some pretty high levels here. And you can see we've got a rejection. And if we come to the daily, just kind of zoom in on it. At the close of today, that'll be a new swing high up around that area there. And we're moving down. Right? Nothing goes up forever. We need price to correct. So the dollar is getting pretty high, right? Getting pretty high. So we're right back down around this 382 when you look at this 4-hour dip. Okay? So decent decline on the DXY. All right, and we see bond yields, curved to the downside a little bit, retreated a little bit, and so we've got that correction on the DXY. So one of the things in your head when you see this happening, we know that this DXY is heavily weighted with the euro, right? 52% or whatnot, depending on who you ask. And so it's like almost like a mirror image with the euro USD. And so there's a play that Brian looked at it. Maybe was it last week? Took a look at it, and we'll see it as we go through the charts that the euro USD is correct, right? And there's a play on that on the 4 hour. So that's that on the DXY. And let's jump into the charts, right? So matter of fact, we'll start out with that NZD CAD from yesterday. That NZD seems to be pretty strong on this correction right now. Look at it moving, right? So it has been moving to the downside for the most part, but we've got a higher move and a higher correction on this NZD CAD. Right? I don't know how long this is going to sustain itself, being that the oil price is pretty strong, and we expect continuation of oil, a continuation to the upside for oil. But right now, this is bullish, right? This is a huge reaction here. I need to add this resistance in at this level that I had not been paying attention to on this NZD CAD. But yeah, this one decided to push even higher against that CAD. That CAD had been rocking and rolling. Yeah, there. So here we are. We moved down to the 4. This is it, right? Took out our, a 1 hour. It took out our A. It's moving higher. It's moving higher. So we'll see. So it is moving higher, like just gangbusters to the upside, right? So there it is, right? That's a miss. That's why we put our protections in place. So that's a negative 1% for me on that one. Gone. But it is what it is. Any questions on the NZD CAD? We'll see what happens as it approaches some of these levels that we're moving into. Oh, just had it. Any questions on that? No? All right. All right. As we say, sometimes you're the bug and sometimes you're the windshield. So we took an L on that. Let's move on. I want to take a look at some of these dollar pairs, right? our dollar yen. Okay, continuing to move to the upside. This is our daily play, right? And we can see how stalling a bit right now, but we're still making progress. As you guys can see, right? We're into that 150 zone, and right here we are with a new AV boundary on this dollar yen. Okay, we've got that 150 on our 4 hours sitting right up around that 118 level. Okay, so if you're looking at an initial setup based on the zones that we like to trade, I'm not buying here, right? That's not my thing. I actually need for this correction to happen for me to buy and get long, right? Or I needed to go move up into this 80-20 zone for a possibility to play the correction to the downside. So that's the 4. Here we are on the 1. Right? We're taking a look at this one yesterday, I believe. And on your 1 hour, your smaller wave is already pushed up into that zone. And you can see how we've got this reaction to the downside. Okay. So this is the chart right here to pay attention to. Here to see right, if we hold, that just hit a D extension. That should be, it's happening fast. So that should be like this now. Okay, that's a fast direction. So we may see price turn over from where we're at. So keep an eye on that dollar yen. Everything's quite lining up just yet. Right, we're almost back being oversold. So let's just continue to watch that dollar yen. But it's made a decent swing out of the 80-20 zone on the 1 hour. Okay, so that's what is that out? That zone that's pushed down 88 pips, and now we're pulling back. So continue to watch the dollar yen. It might be time. So we'll see. Any questions on the dollar yen? No. All right. It's looking decent. Looking decent on the 1 hour. Right. So if you were to play this back to the downside now off of this 1 hour, and it didn't work out, and it continued to push to 150, just then you shift your focus to that 4 hour chart, because that's going to put you up in that zone there, right? Your 80-20 zone on the 4. Right? Sometimes it's just how you have to play things if you're looking to take advantage of it. So we'll continue to watch. Dollar Swissy. Um, all right. So here we are. This is your dollar Swissy on your 4 hour. Okay, we were taking a look at this one yesterday, and we've got to move out of the 80-20 zone. Okay, so we're down now, right? 80 pips or so, depending on where you enter, or you may be waiting on a pullback. Right? You may be waiting on a pullback. See if price can pull back into your zone. Okay, we took out a low. Okay, if it's time for it to correct, maybe we correct to that level, and then we move down. Then we move down from there. Okay, but that initial thrust to the downside is already occurring. Now we've got a little corrective action going on. 4 hour stochastic is in the buy zone, but so far out of that zone, it's pushed down pretty good, right? That's a pretty big target at 218. You know, you may be down in your lower time frames playing the shorter waves, smaller waves. You know, however you want to do it. But we have a potential downside target, 218 pips on that. Okay, at the end of the day. All right. Any questions on the dollar Swiss? You got something that sell waiting on a pullback, sell it again. Okay. I like that idea. I like that idea. Yeah, on those big moves, we know, right? Unless it's something that happens fundamentally that really drives the market, we know there's going to be time. We know it's going to pull back. When you go back and look at your previous charts, you know, we always say we can't control exactly how it gets there. We just know, we just pick out our targets and we develop trade ideas, right? So it may move up, it might consolidate, you know, it may move all over the place. It may push higher, you know, but as long as it doesn't hit your stop loss, right, it's still in play. Okay. All right. And sometimes, at least from my experience, that was one of the hardest things to get a grip on trading this way is that, yeah, it might be initially 80 pips in profit, but it may pull back, take that back, a lot of that 80 pips back before making his final descent to your target. Sometimes that was really, really hard in regards to my trade psychology. But if you hang in there long enough, you'll get it. You'll get it. All right. So that's the dollar Swissy. Um I want to take a look at, since we're in these dollar pairs, take a look at this Euro USD and this play, right? So we continue to, you can see here where at this weekly level, right, 105, you can see we're getting a rejection, right? You guys see that wick? Okay. So we caught some bids there. And the way that plays out on our 4-hour, well, we'll go to the daily first. It's a larger play. So on the daily, you can see here that we never got a 382 retracement. And you can see how we popped right off of that 105, right? We didn't get to that D extension. So looking to move back up to 106, possibly beyond that, don't know. But on the 4, okay, you can see we never got a 382 correction off that B boundary, all right? So we've gotten a reversal to take place, right? So you see how when you use proper risk management, you trade smart, you can absorb those drawdowns, and now you've got this U-turn, okay? So now what we want to see, right? Because that's a pretty big move, right? It's a good acceleration off the lows there, over 100 pips. So what we want to see now, 1 hour time frame, whatever time frame you want to look for, is you want to see if we can get price to pull back to us, right? If you're not already involved with this, right? If you missed that entry, if price can pull back to us, and then we get a continued move up, and you can look for that. Here's your 1 hour, and you can see that it's just swinging off the B boundary there, off the 1. So if you're playing that off the 4, right? Sometimes I know it can get confused in larger ways, smaller ways. So one of the things you could do, if you're playing, say this 4-hour 80-20, okay? And I know we talked about this before, but it's important. You can say, well, this is my setup. So through my lower time frames, I just want to mark my targets out. And then I'll play those fibs because I'll play the fibs to the upside on my lower time frames. Why? Because I'm trying to play this 80-20, this counter trend, in order for it to get to this TP1, right? So in order for it to move another 136 pips or so, I need it to move there, and it's going to go in waves. So what you could do is you could say, all right, I'm using my 4-hour chart as my main chart in regards to my setup. So now what I'm looking for off of my 1 or off of my 15 or off of my 5 is I'm looking to trade those waves. Okay. Like so. Like this. This is how you consistently find these setups, right? Especially, if a trade has taken off, if it's pulled back, if it's taken off from this zone, you just wait for the pullback. And then some folks are just pullback traders anyway, right? They want to see it push up and move up and then come back down to correct. And then they get involved, right? So here's this initial move that's broken our inner trend line. Okay. So our inner trend line has been broken. And you guys can see it's literally the same game over and over. It's pattern driven market. So this one is accelerated, right? We didn't get a 382. So maybe we hit that D extension, right? Maybe we don't get it to return. If we do, great. If not, here's my 4-hour TP1 here. Okay. You guys follow me on this? Drop me a 2 in the chat. Let me know you're with me this morning. This is very important, okay? Because you don't have to that initial move might not be your thing, or if you miss it, no worries, right? Because the market moves in waves. And this is something that I learned uh, from Christopher Terry when I used to uh, use their scanner, right? So anybody uh in IM back in the day and used to use any of their products or anything like that? Yes, no? Yeah,
Yes, I was very.
yes.
Mhm.
Okay, yep, that's right, Donna. That's right. But this is one of the things I really learned from him, and he learned this from Jody Samuels. Look her up. She's been in the game for a while. Uh, but he was big on when you get those reversals, right? When you get those reversals, don't worry. Like let it show you, right? Let it show you, right? So whereas like I'm dripping a trade in here in this zone. Okay. The other approach is let it show you that it wants to react, right? Let it show you that it wants to react and then come back to you, right? So, for example, in this case, if this is my sweet spot in my buy zone, let it now, we have our trade idea off that 4 hour. Now let's see if price actually wants to reverse, right? So let it come back to you, let it take off and come back to you, then we enter. Because then it just becomes our traditional setup. Okay. Just another approach. Right? Now, some people get in on that initial entry, that zone entry. You may have uh that's right. Show me that you want to pull back. Yep. So some of us may drip a trade in at that 80-20 zone, and then you may use this pullback as an opportunity to add to your position. So maybe you go in at a 0.5%, 1/4% on that initial setup in the zone because you identify 80-20, and then once it reverses, this is now your uh your add-on, right? If it comes down to your zone, now I'm adding a position, I'm adding another 0.5% and then letting it go. So now I'm in at 1% that way, or or I entered at a 1/4% and I'm adding another 1/4% as it works towards this target. Okay. So you could do that. Hey, I want to see a reaction, right? So you have to market charts and then just let it come to you. If we hit this D extension, that's okay too, because we know our C becomes our new A and our D becomes our new B. And at some point, right, this will be a new fib, and then it's the same thing. We let that come to us, right? And then what he used to always teach is that if this is your game and the trade never comes to you, right, the way you need it to, then it is what it is. You move on to the next setup. you know. But if this is what I want to see, right? And we talk about this, right? It's just another phrase. We talk about this in regards to our different entry techniques when we go through the training. Whereas, yes, we could get in, like Reese was talking yesterday about how he'll wait for that swing low to form, and then he'll utilize that as an opportunity, right? Um, but there may be some of you who say, I need an additional confirmation. So I need a swing loader, right? Which reconfirms my support in this case. But then I need that additional confirmation. We always talk about that 1, 2, 3, right? I need that trend line break. I need a pullback to a key area in my zone, right? And then you may use you need just a stochastic, right? To be in the buy zone once it pulls back to this level. And then, you need, a candlestick formation or whatnot, bullish engulfing to react, then you get in, right? So we talk about those things in the training. But just to sum it up, hey, I need a break and I need a pullback, right? To my sweet spot. Where in this case, this is one of those ones where, okay, if my zone is a 61.8 deeper, 50% or whatnot, I didn't get it. So I can't take that trade. I needed to come to my sweet spot for me to get long on that. And that's where the discipline as a trader. Okay. Any questions on the Euro USD? Oh, no. All
No.
right. Okay, and that's the game, and that's the game we play, right? So we can't be mad if we say we wait for pullbacks and we enter. So for example, say this pull back to my zone and I entered it, okay? And I got an entry on it, like so, got into the position, and I'm looking for it uh to move up from here, but it does one of these, right? The Gartley zone. Makes an ABCD wave and correction takes me out. That's the game we play, ladies and gentlemen. Right? We can't allow for that to frustrate us. We have to understand that that's all part of the process, and that at the end of the day, over a series of trades, you have an edge. It's just not time, right? It's just not time. That's just how the game goes. We have to chalk that up as the loss that it is, and keep on moving, right? So maybe it pushes deeper, but that doesn't mean later, right? That doesn't mean later. Okay, price wasn't ready now. We make a lower low. So if we make a lower low, we know we automatically adjust our trend line. Bang. That doesn't mean later that trade says, okay, now we caught bids at this 104.45 level, and now it's ready to go. Okay, that we can't predict, right? We can't. Okay? Those are just the unknowns. Okay, which is why risk management and having trade plans. Okay. All right. So that's the Euro USD. So the difference between swing traders and scalpers is that if I was watching my trades play out, seeing price change direction. Have seen price change in duration. No, no. That when you're scalping, you still have your risk too in place. You still, when you're scalping, you're still gonna have your risk management in place. You might have, you may be playing on a lower time frame, but at the end of the day, it's still the same concept. It's just that you still would get stopped out, right? If your stop was below a certain low, below a certain level of support, you still would get stopped out. Your stop loss may be smaller, tighter, but you got to remember, right? We divide our risk by our stop loss, so it doesn't matter. So if you're scalping, if you were a type of scalper and you didn't use stop losses and you were saying, hey, if it reverses and goes down this far, then I'm out to trade, and you were manually doing it, yeah, you could have prevented it. But if you're scalping and you're still using, risk parameters and using, stop losses, then there's still a possibility that you're going to take the hit. You know, 1% is going to be 1%, right? So if you're swing trading, a larger move and the stop loss is 50 pips, it's 1%. If you're on a lower time frame, 5-minute chart, 1-minute chart, and your stop loss is 5 pips or 10 pips, it's still 1%. So it doesn't matter. It's just playing out faster. Great question. All right, so let's take a look at the pound dollar. Okay. See what we got going, right? So look, here we are on this 4 hour. You guys see how things swing? Look at that. Okay. So this is a similar scenario, right? So we pushed deeper. Okay. We didn't get to that D extension, almost did. Almost got there. Right. What's happening? That was the higher time frame. But see how we're back up above this 121? So now it's just a question of, how high is it going to drive? But when is that correction going to come? You know, this is a huge impulsive move. So look at this. So if you played it to where you had to stop at the D extension, you didn't get stopped out, and right now you're just about break even on that swing. Okay. So if it continues to move higher, what's that? 32 pips to that level. That's a daily level here, 95. Then finally back up like 254. So we continue to see, right? We see that the bond yields are correcting. So do we see a continued follow through with the dollar on that? Do we see a continued correction on the DXY? If so, we may continue to see this move up. right? So the question becomes, right, how do I get involved in that? I've identified it now. Is moving to the upside. This is a 1 minute chart. So here you go. Right? Just in relation to what we were just talking about. So let me, this is a 1 minute chart. As a matter of fact, let's use let's scan, right? Hit our fibs. There you go. Right? That's on a 1 minute chart. Okay. See, I don't like all this necessarily. So what you could do is, look, that's a quick scan. Just take your your smart fib and run it, and then you can just close that. And that's what that looks like. So you can see here on a 1 minute, we didn't get much of a correction. It's just accelerating, right? To the upside. If we move up to a 5 minute, okay? We move up to a 5 minute chart, you can clearly see where that reversal occurred. Right? You can clearly see where that started to make the U-turn. And that's what you're seeing on the higher time frame, right? Look, you can see where prices made that U-turn. Those fib levels, the B boundary, the 118, 127 zone on the counter, those are huge reversals, right? The extension's getting hit. That's why we use them. So you can come in here, right? Scan your fibs, see what you got. Look at that. Right? It's a 5 minute chart. Somebody tell me what that is. What setup? What kind of setup is that?
80-20.
That's it. All right. See that there? Right. So if you were looking to continue this to the upside, right? You can see where it's lining you up because your A's, because of the moves. You see the volatility and how much it moves on the 5 minute in and out. So you can see here this stress down took out one of your A's. So it started right here to the upside. So if you're saying this is going to continue bullish towards that target, right? You could just do that, take your analytics out, and this is where you are on your current fib right now. So if I come here and I take this TP1, this is the 4 hour, right? We'll take this resistance level here, move it down. All right. We'll take this level, move it down. You've got some other levels here. So just down like that. And there. So you can see that reflected out. Chart. Okay, so there's that 4 hour TP1 level. Here, these resistance levels here, and this is where we are. So if I'm on a 5 minute chart and I'm playing the waves, okay, here we are moving up into an 80-20 zone. But if I was just looking to play longs, I would want it to come down to my sweet spot, just like that. And then I would look to get long. Okay. Like so. No different. Doesn't matter. It's gonna move in waves. Right? And you ride these ABCD waves until it fails. Right? But that's where you are. Right? So if you had it on the 15, okay, it's just a larger wave. Okay? Look how easy the software is making it. Right? So there's my 15. Okay, let's take a look at it. Scan it. That's where we are. All right. I want to see this. Hey, can I continue to get a move to the upside? So I'll play my fibs to the upside. Take that off. Bang. That's your 15-minute look. All right. 30-minute. And you can set these up as separate charts, of course. What we look like. Scan it. That's where we are. Okay. Moving up in the zone. But thinking, hey, I want to continue to work towards that 4 hour target, then this A should be taken out. Well, I'll move them to the upside, right? So take this out. And we can see that if the extension on the 30 has been hit, we're waiting on that new high to form. Once that new high forms, C becomes our new A. Whenever that new high forms, D become our new B. Okay. Easy work, right? This is lightweight to us now. We're getting the reps in. You guys can do this in your sleep. Right? So all we're doing is we're identifying reversal zones using a fib, support resistance. We're identifying areas of U-turn. B boundary, right? 118, 127 zone, we don't get it, right? So we wait for the low to form. We don't hit the D. Where is that a reversal going to occur? And we're moving up. Once we get that move, that thrust to the upside, can we get pullbacks and continuations? You guys can play that all day, all week, all month, all quarter, all year. Questions on the pound dollar?
Oh,
All right. Is it a USD? Okay. Good. Sloppy. It took forever, but we're closing in on TP1. Closing in on TP. Dollar finally gave way. Getting a correction. We got the NZD strengthening. Right. So these technical levels and these zones that we trade have become a really good forecast on what's to come. On what's to come. This type of work is the best. It is. It is. Okay. So and we know, right? It's frustrating. Like if you have a smaller account that you're trading and things like that, it can be frustrating at times because the gains don't look like much. This is where you develop your discipline, right? This is when you're in the grind shop putting in work. This is when you're in the lab. So you do grow that account, or you do get access to capital, you're already rocking and rolling. You don't want to still be going through trial and error when you get to that level. Right? It takes what it takes. Right? The standard is the standard. Keep working. Okay? Trust yourself. All right. So that's the NZD USD. We're pretty much at TP1, right? So if you're in that swing, you know, it's Friday, you want to secure the bag. We may have to continue upside moving on that later, but that's been a pretty good move to the upside. Any questions on the NZD USD?
no.
All right. All right. Okay. So let's take a look at the NZD JPY since we're in these New Zealand pairs. Uh, so, okay. Take a look at it on the 4. We're above that 89.67 level. So we're looking for pullbacks and continuations to that extension. Okay. Pullbacks and continuations. Look at that. Look how crazy that looks. But at the end of the day, everybody, okay, you guys know what's coming. It's still an ABCD way. right? So we're looking for continued pullbacks and continuation. So if I'm trading this, right, look how we're above this level. What's going on R1? Here, just scan here, right? So this is R1 right here. Bang. So the extension is here. Okay? The extension is here. So we look for pullbacks and continuations at this point. Right? So here is our C, our lowest point within our AP boundary. We got our D extension that was hit. See, that almost looked like a swing high. Right? This is why this is important. See that? Look at your second candle to the right, pushed higher. So you don't have a new fib yet, right? Maybe this is going to become your new fib. Second candle to the right. Okay. This one to close, the next one to close lower than that center wick. Then you'll have a new high. All right. I know it gets redundant, everybody, but it works. Okay. It works. Look at it moving. Right? You guys remember this for a long time ago. Okay. Still moving. Still moving. That's a weekly chart. Okay. Hit the buy zone, took off. Questions on the NZD-JPY? No?
No.
All right. Okay. So let's go to I know another one that we had posted was this cat Swissy. All right. Oh, this is what we're doing here. Oh goodness, getting a pullback. So good move out of the zone. And now we're pulling back. So if you've already moved your stop down, you might be headed for a stop profit on that one for a stop break even, but it's pulling back. But still like to see that move down, right? Still see that move down to the 382. We know it could bounce all over the place, but right now we're getting a pullback. So on the cat in, but it's been a decent move out of the area. Okay. Some of you might have gotten that earlier. I didn't. So when I seen it and I posted it, this is where I was. But we're pulling back now. So pull back into a sweet spot. So let's see if it holds and then we get that continuation. So that's the cat Swissy. What's the name of the one you mentioned? She wasn't from I am. Oh, Christopher Terry. Jody Samuels. So you'll find some older videos, but she's big time. Like you see her on all like funny shows on TV and stuff like that. Uh, but what what so what you would have is I'll show you. Her name is Jody Samuels. And once I learned that from Christopher Terry, when I went deeper to look her up, I learned a lot of things in regards to how to play those pullbacks off of those swings. Because when you look at an ABCD wave, so let me try to pull this up like this, right? Because this is really cool. But this is really how I learned how to find confidence. You know how many people always say like trade with the trend, don't counter trend. Anybody ever heard that?
Yep.
Yep. Right. So you can have like, for example, you'll get a AB boundary like so. Okay. So this is when I really homed in on this stuff and was using, by learning. Like I learned a lot, you know. Uh, that combined with my education from MTI, like turned me into a beast. Not gonna lie, right? In regards to truly understanding technical analysis. Now I had to go deeper, and go elsewhere for the education on the fundamentals. But in regards to technical analysis, I'm still. So say you have, we'll do we'll set up a harmonic. Right? So we'll say we'll do like a simple part, like 82. We bounce, we pull back like this. Actually, it's supposed to be right there. Right? So you get like this sound. You know, you're X to A to B, B to C. Just do that. Bad. It's a bad wrong ratio. Let's deep. But here's your ratio. Okay, so this is a bad like that. So this is your D point. Okay. So in essence, so this is your D point. Now, when you're trading those, right, and then if you drop it lower, that's when you get like your Gartley's, it's different ratios. Everything is derived from Fibonacci ratio, right? So if I'd have brought that deeper, you move to your Gartley patterns, that right, you can adjust this here, it gives you different things, right? So like that. But the key is, right, when you're trading that, is this D point, because this is an ABCD wave, correct? So think about this. We have A, B, C, D. Don't let the shapes confuse you, right? Get in your head. The whole point in all of it is to find a reversal zone. So that's an ABCD wave. You see that? You see how the harmonic pattern has those different fib levels, right? So A, B, C, D, our C becomes our new A, our D becomes our new B. Bang, that's what you're looking at. See how that lines up? Get it? Got it. Right? So we're looking for a reversal here, a reversal in this zone, which is why if you used, right, that scanner, a lot of times you would have a minimum entry. Tell me I'm lying. I ain't lying. Right? Right? So in essence, right, we've turned you all into scanners in a sense, right? Bang, bang. That look familiar? Yes, no?
Yes, it does.
Okay, right? Yes, that's without knowing this is an alternate bat, this is a Gartley. That's what we always, right? If you just hang with us for a while, you'll see that if a lot of the strategy is derived from the Fibonacci sequence, which is why we teach it fundamentally, right? This is all ratios, okay? So, and this is how the targets are set up. So you'll have, and then you would just see something like this. If I'm wrong, tell me I'm wrong, okay? Here. Bang. See that? You have stop. I ain't lying. So, Reese, Jody Samuels, right? Here's our reversal zone. Okay. Here's the move. Trend line. Okay. I'm using the technology. I'm using my fib. I'm using my harmonic pattern to do the work for me to identify my potential reversals. Okay. See, and we break it down to its core. so you can understand and become an independent profitable trader. The key in that is independent, right? So what you look for using something like that scanner is you're looking for price to reverse, just like we teach you with the 80/20s. Just like that, right? Now, here, right? So we know that this is an AB boundary, a new AB boundary. A, B. If you guys believe me, drop me a 1 in the chat. That's an AB boundary. All right? A, B, C, D. Our C becomes our new A, our D becomes our new B. It's a new AB. So what happens? We either get a B boundary reversal, like so, okay, or we get price to push down, shallow retracement. That's the new 382. And we get price to push down, bang, bang, pushes into our zone. If that does that, right, then price makes, in essence, what? A lower low. We adjust our trend line because this is now the low. And guess what happens? This is where Jody Samuels comes in, right? Presbyterian and all that, what I was talking about. They like to see that trade push up, because if it finds support and it reacts and you catch bids, at some point, if we truly believe that the market moves in waves, everybody is going to form what? Eventually another high of resistance, which is what? A swing high. 2 candles to the left, 2 candles to the right. That's lower than our center wick high. What is that going to give us? That's going to give us another resistance level. Okay. This formed a swing low, 2 candles to the left, 2 candles to the right. That's higher than our center candle low. That's support. Once you get that, pull your weapon out. Boom. Then see price pull back. At your B boundary, your minimum entry, you already have support. That's why it's a B boundary. If it reverses from there, same thing applies. Once we get that swing high, it's going to form resistance. Price is there. Will our fib out? We'll wait for price to pull back. That's it. That's it. So if you come to something And you have that now. Now, if this was a, let me go back up here. Yeah. Look at that closely. That's all it is, over and over and over again. Okay, over and over and over again, right? That's all it is. So now, if it's meant to move higher, right, it'll carry, right? So for example, when we came back here, like that, if it swings off this point here within that AB boundary, then we know, right? That's an H6 pullback, longer term projection because of our knowledge range. We know that that can go to that 118 extension. It can move higher. It can move through those levels and move higher. Okay. Now, where you decide to play these reversals, say this is a 1 hour reversal. Think about it. It's no different than what we just covered today. You could go down. So if this is a 1 hour, say this was a 1 hour pattern, you can go down to your 15-minute or your 5-minute to look for this move. Everybody follow me on that? Drop me a 2. Very important. So no matter how you look at it, it's the same thing that we were just talking about on what? I believe it was your pound dollar, your Euro USD, right? When we were going over and drawing this up, right? This was on here. So this is a prime example. This is an 80-20 swing that went beyond the zone. But look at it from was it this one? Here. That's pretty much a B boundary swing. That's exactly what we just covered. Is it not? Right. That's exactly what we just covered. It's just when you're using, for example, we put on the smart patterns here. We'll see. It's just finding them on a smaller scale, right? When you're swinging, you're looking at a bigger move. Everybody sees this, right? But this, in essence, is the same thing. So here, this move, okay? This is, right, an ABCD wave, right? The different ratios is what determines the pattern, okay? But you could take this here and you can move down to your 5-minute, your 15-minute, and try to make a play off of that, right? So we're here. Anyway, I don't know what just happened. I don't think it did. Anyway, but you guys can move down through your lower time frame and find that reversal point, right? Find that reversal point and play it from there, just like how I just taught you guys. Okay, there it is right there. Okay, so if I like this, okay, right here, right? So if we take this, you see that move there? That was your move, right? Out of that zone. So if you go down to like your 5-minute, right, and find it. too hard to locate because it's basically on the 5. But you could play that. You could take it down to a real granular level. There it is, right? And try to make a move, right? Not the best example, it's choppy, but you can see where that reversal occurred and started to move up. This was a bad one because that was a consolidation, then it broke out. But you guys can see where you can find on a lower time frame the reversal point coming off the higher time frame pattern and then play it, right? So we're just looking at everything on a larger scale. This is our move here, right? So you can see there's 50 million patterns occurring within what we already do, right? And this is what I was talking about yesterday, how we gobble things up with the swing trade positions. Here you can see this pullback. Well, this is my sweet spot zone anyway, right? I didn't need that, right? I don't need this because I'm already taking a ride from the C to D. This is my major move here, okay? And that's the beauty behind what we do, right? So look, there, this was the move for 350 pips to the downside. I didn't need all of this. But if those larger plays aren't it's just not your thing, right? This is how you can utilize that. Like here, this major drop off in this zone, right? You could play this on a lower time frame, right? Here was my D point. Okay. I can get down to the 5 minute, 15 minute, right? 1 minute and look to play the waves because this looks like huge bearish candles here, but you better believe when you move down to the lower time frames, there was a wave that right? You can catch that pullback. You can play that ABCD wave to the downside. So that's how you can use that. But everything right that we just covered is already built into what we do. Right? So Jody Samuels, right? Trend line break, move to the upside, pull back, and then look to catch the continuation. All right. Any questions? Okay. Hope that helped. Hope that helped some folks today. No? Awesome, Jeremy. That's gonna be it, right? So we posted a lot of stuff in the Discord in regards to some updates and stuff like that as we close out the month. But there's quite a few, right? That's moving in our direction. The NZD CAD was a bummer today, but I was hoping that helped. But that was I mean, I guess it makes sense now with when you look at the NZD pairs and how they're really making that move to the upside. It's pretty strong right now. So can't negate that fact. It is what it is. So we had the other setups, right? The NZD CAD. So there's your NZD Swissy. We didn't get to that one. So that one was spot on off the 80-20 swing. So we just missed the NZD CAD. The rest of them are moving in our direction. So that's another swing, right? See that? You give it room. And so out of that zone, right? That's up 246 pips. We'll see if that can make it to TP2 on that NZD Swiss. Our Euro Swissy, we'll close out on that one. Was another one too, right? You guys see how things just move in cycles, which is why we look at all the pairs, right? Because that prevents us from having to be perfect with our timing, right? We don't have to be over leveraged because we could just pick the pips out of the market. Right? We can pick them all. So that's your Euro Swiss. So just on some of those Swiss crosses alone, man, dollar Swiss, Euro Swiss, CAD Swiss, NZD Swiss, right? I don't even know what the pip total is on that. But you can see how they're all moving in that same direction. All right. So great week, everybody. Awesome month. I hope you all have had a lot of opportunity to learn, to really dig in. Right. So let's continue to compress time frames and shorten the learning curve. we'll be right back Saturday morning, 7 a.m. Eastern time for the weekly Forex ritual, which is the foundation of how we find these setups. So if you can make it, please do. If not, make sure you listen to the recording. Have a great day, everybody. Enjoy the rest of your Friday.
Thank you.
Welcome.